vol trade, the recovery, and just a lot of good stuff that's going on at 1 o'clock today. All you have to do is go to the Top Gun Options Facebook page, facebook.com/Top Gun Options, and it's right here up near the top. And you can register, or just go to my Twitter page. You can follow me, obviously, at WizCheck6, and it's right here up here near the top, close to me calling for the resignation of the coward sheriff down here in Broward County. Just absolutely ridiculous. Anyway. So yesterday it was announced over in China that they have a new emperor, man. He's doing the old president for life thing. Looks like he's taking, going back to one-man rule there in China, or following in Vladimir Putin's footsteps. Could be good and bad. That means, he could be a little worried about somebody nipping at his heels, right? And political opponents. I mean, the guy's not a spring chicken here. Was he 60? Yeah, he's 64. So could be a little worried that somebody's coming after him, but and he's also going to own any crisis should it happen on his watch. So that's interesting. We haven't talked about the FXI in a while, and that's the iShares Large Cap China ETF. And as you can see, in the past 2 months, it's kind of mirrored our market. Rip your face off rally coming out of the gates in January. There's the short vol implosion, and then we got most of our implosion back, about 70-75% of it. These guys really didn't get most of their implosion back, but moving on. Definitely this guy needs to go. Sheriff Israel, a Democrat down here, a friend of Hillary. He's an absolute disgrace. I saw him interview this weekend. I gave the guy the gun and training. If he doesn't act, it ain't my fault. You're awful. You're a disgrace to your uniform. Folks, we have two commanding officers, the United States Navy commanding officers, who were, the skippers of two ships that had, in separate incidents, they collided with another vessel. People died on board those ships. Within days, the admirals that were in charge of those that battle group or whatever it was removed those commanding officers. Why? There's a famous sentence whenever you get removed. It says, "I have lost faith and confidence in your ability to lead." That's within days. You don't wait for an investigation. Two ships ain't supposed to go bump in the night. They were relieved, and now after the investigation, they are being court-martialed and charged with negligent manslaughter. They can go to jail. Don't know if they will or not. They will be thrown in front of a court-martial, a jury of their peers, several other line officers. And then it's disgusting. This guy is your typical Democrat. You can do nothing in government and get fired. This guy is just as much of a coward as his four of his deputies. He's a disgrace. He's going to go eventually. If he stays, there's your typical Democrat. You just can't do anything wrong, and you're going to stay in office. He is responsible for the people on his command in uniform. And if they ain't ready to lay down their lives when they put this uniform on, they're in the wrong business. It ain't just a paycheck, folks. You're a disgrace, Sheriff Israel. Anyway, other than that, Ms. Lincoln, how's the play? So BlackRock last week got in a little bit of a battle with Morgan Stanley about which direction the market was going to go. I agreed with BlackRock, the world's largest asset manager. Morgan Stanley's kind of my silver medalist in the financials behind JP Morgan, and they said that the implosion we saw is just an appetizer. The main course is coming. I couldn't hear you, Morgan Stanley, after the Rip Your Face Off rally. That we predicted. I said for about a week and a half, we'd kind of hang around this 50-day moving average, and then the next leg would be up. Absolutely nailed it. Matter of fact, on Friday, we had, about $12,500 in profits in trades that closed on Friday. We had a VXX bear call spread that hit max profit, and take a look at VXX. I talked about, we predicted the dead cat bounce and volatility. So we traded bullish double verticals as the short vol traders got wiped out, and then we put on bearish double verticals. I said vol's going to crush. This is this little dead cat bounce, and we're going to head lower. So we're down another 3% today. We have another bear call spread onto Friday, the 44.45 bear call spread. Let's see, we're risking approximately, we're risking 54 right here. We're risking $5,400 to potentially make $2,100, and we put that trade on last Thursday, so potentially making $2,000 in a week. We have been banking money on our volatility trades. So a nice rip your face off rally out of the gate here. We have big flight schedule this week. A lot going on this week as far as Chairman Powell is in front of the House and the Senate, his first appearance as the new Fed skipper. You know, it'll be interesting to see what his spoken words were. We saw the minutes last week that were relatively dovish, you know, very, very bullish for the stock market and the economy, right? It was good news. You know, the Fed says, hey, things are looking pretty damn good. So we're going to get his spoken word in a little bit. I think we're going to get I don't know, 3 to 4 rate increases this year. Looking at the Fed funds futures rate, there's an 85% probability that we're going to get an interest rate increase in March. So that's pretty damn high. So I think we're gonna get that. Look at this: a record 78% of S&P 500 companies have beat analyst estimates for the fourth quarter. And remember, there was a lot of earnings that just were awful, like J.P. Morgan, horrible earnings. Why? Because they had pulled forward a lot of bad, but said, hey, the Trump tax reform is going to be just phenomenal. So look at that, a record. We haven't seen earnings that good since 2011. But, you know, right, this is Barack Hussein Obama's economy, isn't it? Anyway, folks, so good stuff going on. Let's go through the flight schedule. We got new home sales today. That was kind of a miss. That doesn't look like a nice number, right? 650 forecast 655, and we got 593. It's a good number because new home prices are actually really, really high. So people are being forced, not being able to get into a new home and actually having to rent, which ain't super good. But it's a market, folks. There's a bid, there's an ask, and it should settle out. So I'm not too worried about that. Tomorrow's ginormous. We get durable goods and core durable goods orders. The Fed chairman's going to testify. We got a trade balance, wholesale inventories, S&P Case-Shiller, so more housing, and the Conference Board's consumer confidence number. That's a big number right there, an important one. But let's go back to durable goods. Whenever you see the word core, it means excluding something or X something. This is X transportation items. So we're going to get a lot of macroeconomic data tomorrow. I haven't seen a macro week this big in a while. We get some China data as well. Manufacturing and non-manufacturing PMI. So that I'm going to keep my eye on that. Wednesday, we get preliminary GDP. If you don't know, GDP comes out in 3 parts: advanced, preliminary, and final. So obviously the one that has the biggest impact is advanced because it's the first, and the final allows the government to correct a bunch of stuff. So only the government gets 3 bites at the same apple to get it right. So we'll see how GDP is going. Chicago PMI is usually a big number to see how the Midwest is doing. Pending home sales and also crude oil inventory. Had a little bit of a rally lately in crude. We got to take a look at our ExxonMobil position. I have an iron condor on it that it's hitting the top of. Thursday, personal spending. Personal income, those are important. Those are important numbers. The Fed chairman again testifying, and then Friday we get University of Michigan numbers, consumer sentiment, and inflation. So it's a big week, folks, as far as macroeconomic data, all in 1 week. Haven't seen that in a while. Folks, we've nailed this. We predicted, I said, hey, the first or second week in February is going to suck. It's usually volatile. Valentine's Day and NFL, no more football. Thank God my Eagles won, blah, blah, blah. I said February usually sucks. And then what happened? The short vol trade happened. I said we were not going to bust the 200-day moving average. I threw disaster puts on just in case I was wrong. I said we're going to go back up to the 50, trade around it, and then head higher. Folks, we've been nailing it here at Top Gun Options and having an absolute blast while doing it. I think we're above I've never in 25 years of doing this had nearly a 40% return in the first 2 months of a year. If a hedge fund had a 40% return in the first 2 months of the year, they would close and go to the Hamptons and not trade the rest of the year. It's insane. So we're having a blast. We're actually going to be doing a full throttle launch next week. Going to open the doors up to potentially 50 new members. I think we're going to do 50. Just based on atrophy and stuff like that. So anyway, folks, I got to get ready for my 1 o'clock show here when I'm going to be leading that roundtable. Head to the Facebook page if you're a member. If you are a member of the weekly option service, you're going to go over to there. We're going to send you the link to head over to the timing research event. Okay. All right, folks, have a great rest of your day. Happy hunting. Make sure you hedge, and I'll see a lot of you at 1 o'clock this afternoon.